Hey, happy weekend. Sunday afternoon, we're going in for the exclusive stock setups that you can trade options on too. Dale Sucker Trader Boys here. So let's rock this. We got the SPY right here on the weekly time frame. We got a nice 2-week retracement on the SPY. Where I'd really like to see the SPY to come down to be honest, it would be down in here is at the 321.50 mark right there. But we may not see enough weakness come to the market, but as a great investor, we're not opinionated. We do what the chart tells us to do, so we're going to look at what we have. So if the markets do continue down this week, we're looking for 321.50. If they do not, here's what we're going to be looking for. So this past week, we found demand right here, and that demand was proven like we discussed last week right here with these candles right here, coming into that price area there, couldn't go lower, more buyers and sellers, and up we go. Now we dropped down here, we dropped down to here, the last couple days there, and then finally on Friday we dropped deep into that zone. So right now there are no more buyers at this area, so this area is going to maintain, otherwise we are going lower. We're going lower. So we'll take a look at where this demand level comes from. It's coming from a lower time frame chart in just a few minutes here, but if we maintain this area right here, let's drift down to the 4-hour time frame here. So on the 4-hour, we're in the same price area. So 4-hour, if we get above this 4-hour candle here, and we really got to get above this yellow box. Get above this yellow box. On the S&P ETF, Exchange Traded Fund, this SPY right here, we got a lower low. If you look at the futures market, we actually had the same low in the overnight transactions, but we do not have confirmed strength in this market yet. So we don't have confirmation we're going the upward direction. So right now we're still dropping. You can see we're starting to form a falling wedge, and a falling wedge is one of my favorite formations for bullish moves. We got to break this upper trend line. Now, if that was to happen, you can see the upper targets right there. But coming down to the 30-minute time frame right here, this is the area that we've got to get above to confirm strength. So my expectation is we're going to go up into this area, probably come up to this first area of supply right here, and then look for the retracement. Look for the retracement, and what we really want to do is hold this upper trend line. If we do break above, hold the upper trend line, right, and then look for the entry to go north. Now, if the markets don't hold, we're going to be looking for this to go lower. Now, a couple things on this. Go back to the 4-hour time frame right here. You can see we've got a lower low is lower than the most recent, but on the momentum gauge here, being the MACD, moving average convergence divergence, we have a higher low. So we have a divergence. We don't have a lot of strength in this push to the downward direction. Now, if we look at the shorter term frame and we look at the 15-minute time frame here, we have the same thing. We have a lower low on the 15-minute time frame, closer together, but we still have the higher low coming through on the MACD. So we got divergence here where it's not confirming the strength in the downward movement. So that gives us a probability that we can go up here, but we've got to break above this high right here to confirm the buyers are in this market before we can go higher, before we can look for entry. Right? So that's the SPY. We're going to take a look at Adobe here, ADBE. Adobe on the weekly time frame. Let's zoom in a little here. Beautiful up move. We've gone from 260 all the way through to 540. Massive move to the upward direction there, coming off the March lows. Beautiful retracement here the last couple of weeks. This is where your weekly demand is. We're coming in lower, 13-week moving average coming in here, exponential moving average at the 451 area right here. So that's where your weekly demand is, and that'd be phenomenal. So if we can get some downside movement this week, that'll be actually very, very healthy. If not, the markets can maintain its strength. Here's what we're going to be looking at on the daily time frame. This is your daily demand level. So you can see here we got the 50-day moving average, which is this red moving average right here, and we dropped into this demand zone, right? And we found buyers here. Even on Friday, the tail was formed, that's buyers coming in. Tail here formed, that's buyers coming in. Reversal here, that's buyers coming in. So 463.91, there are buyers in this demand level here at the 50-period moving average. So this is not looking too bad. So if we can maintain strength and push up, 491 is going to be first target, 503 is going to be second target, and 520 will be third target unless let the trade run, and then we'll accumulate more over time as a longer term transaction. So right here on the 4-hour time frame, we got a nice little bullish harami, not the perfect form of a bullish harami. We came with that demand level at 464. And if we trade above this candle's high here tomorrow, then we can look for an entry at 474 or above. Right? 474 above, trading above the bullish harami, and then we can look for the entry trading up to 491.21 for target number 1. Dropping this down to the 30-minute time frame, just go down smaller. That'd be breaking above the high right here, and that would then confirm. Now we can drop down into this demand level and we can get a lower entry point with that stop loss below 457.80, and that would give us a nice low risk, huge reward transaction. So this is kind of we'll wait and see what's going to happen with this one. But nice big gap up, nice retracement off this, double bottom forming here. And before you get real confirmation of it being double bottom, you got to get above this high right here. But we can definitely enter on this on strength if the S&P can maintain its movement on the upside. So we'll see here in a couple hours as the futures markets open up and where they're going to open and what's going to happen there. All right, thanks for registering. AMD on the weekly time frame. We're going to a multiple time frame analysis, top-down analysis. We are way above the 13 period. Very, very strong stock here. Massive accumulation here by institutions on AMD. We put this one out there last week. Entry right here is 76.20. Stop loss below 73.93. And we're looking pretty promising on this. Let's drop down to the daily time frame. This is your daily demand level, and you've got demand coming in, proven right here, right here, right here. And on Friday, we held this area and closed above this area. So that confirms we've got buyers here. So this one is hot. It is ready to go. Drop into this area would be phenomenal. 50-day moving average coming in below us here. That's going to be a great and phenomenal support area, as proven by reversal here. So that's going to be a great transaction. So we'll kind of see how this forms tomorrow. But you can take the trade at 76.20, stop loss below 73.93, right, which would be below your moving average of 73.74 here, would be phenomenal. And then you're going to have target 1, 78.41, target 2, 80.41, right, and then coming up, target 3 at 88.88, and then you're going to let the rest of this sucker run if we can get back in our strong bull market. Right, back in the strong bull market. Let's break this down next time frame. Look at the 4 hour. Let's see what we got. Nice little bullish harami forming here. So your entry point for confirmation will be above the high of this 4 hour candle. The high of that 4 hour candle right there is, we are looking at 76.98. So if you want to get confirmation on this, up in this area. Now, if we get a gap up tomorrow, gap up on this trade here tomorrow, then what you're going to be looking to do is wait for the retracement, gap fill, take the trade, stop loss below this low right here. And that could be very, very common. We'll see how the futures trade in the overnight session to see what's going to take place there. 80.41 target 1, 88.88, 88.80 for target 2, let the rest run. Right, just drop this down to the 30-minute time frame. See the breakdown here. Nice strength coming out of here. Break above this high. That's your entry point. That's AMD. Okay, coming through. IPHI. Oh, this one is looking phenomenal on the weekly time frame. Right in here is a weekly demand level. This is one of the better trades we're looking at here. Massive strength shown right here with the candle right here with the big long tail right there. A nice little formation of a bullish candle. Right, push back up. Now here's what we need to see on this. Let's drop this down. Coming down to the daily time frame. Looks phenomenal on the weekly. On the daily, we want to get above 106.08. 106.08, break above this base right here. So we got a high base, get the breakout. We're in this trade. Right, we're going to be in this trade now. Right here with these pivot lows right here, you're going to have resistance. Right, that previous support is going to become resistance. 20 period moving average going to be dropping in this area here. So we will be taking a profit. Right, target 1, 109.6. 109.62, 109.62 will be target number 1. We're going to take some profit, move that stop loss up. We'll see that strength in the markets. Right. Target number 2, 116.42, and then let the rest run on this sucker because this thing can move. This can move. Right now, if, and this would be the better scenario. The better scenario would be a down move. And the down move we're looking for is when we come down to the 4 hour time frame, we've got this little rally, base rally. Right, so right here is a little demand zone. So what I'd love to see is this actually drop down to 95.20. Go from 103.26 down to 95.20. Right, get a lower entry point. Right, breaking below this low, lower entry point. Stop loss down here at $90. Right, then look for 109.62 for target 1. And that'd be amazing. Low risk, massive reward transaction on that guy. That'd be a phenomenal transaction if that can make happen. So if we can get a drop in the market tomorrow, a break below this low, get a lower entry point. Now to take this trade with greater confirmation, less risk, higher probability of it working for you and making you money, what you want to see is you can let this drop in to this area of 95.20, drop into this area 95.20, wait for it to move back above, and then take your trade on strength with buyers confirming they are there and committing to the market. Then take the trade on strength with your stop loss below that $91 area. TSCO, big mover and shaker, right? From 70 bucks to 155, big mover and shaker, massive institution accumulation happening right here. This thing is amazing. Now we've got a beautiful retracement in this market, coming back to the 13-week moving average. So we're coming in between the 13 and 20. This is a phenomenal area in between 13 and 20 for average valuations to get involved in transactions. Right, coming down to the daily time frame. Now this sucker here just grinded and grinded and grinded higher. So there was constant accumulation on this. So right here you've got a little demand area. All right here is a little demand area. Proven demand by this candle here coming in, touching, and taking off. Right, so if we can get the retracement down to 134.57, that would be absolutely ideal. 134.57 would be ideal. Stop loss below 132.90. Then we can look for the move up. Now we're finding strength right here. Buyer stepped in, gapped up, moved down. Now you'll see right here these low prices are very, very similar. So the buyers are stepping into this market. Right? So this may not get down to 134.57. So we have to be ready for game plan number 2. Game plan number 2 is this looking here is becoming a demand level here with that gap up coming into this area here. So game plan number 2 would be trading above this 4-hour high. Trade above the 4-hour high. We're going to take the trade, look for the upside. Right through this area here is going to be target number 1. Target number 1 coming in here. Right, so trade above this high right here, 138.50. Take the trade. That way your stop loss is going to come below the low here around 136.60. Right, looking for target 1 at 143.52. We'll come in here, target number 2, right in here at 148.39, and then we're going to let this sucker go. Right, because we could be on the next massive up leg of this for a longer term transaction where you're sitting back on the beach and just making money. Right, and that's when we start to call the computer the printing press. This is the ideal scenario. So we've got these beautiful weekly retracements here that get us into some short-term trades as well as longer-term transactions. And if we pick up those longer-term transactions, that's when you do less and make more. And that's really the ideal scenario to get into. So we'll see what happens here. Get the drop. 134.57 is where your entry point is. If you want to increase probability, let it drop in. Wait for it to break back above 134.57. Boom, take your trade. Right? If we don't get the drop in the markets, when we go above 138.50, that's your point of purchase. 138.50, stop loss below 136.60. Looking for target 143 and then 148. All right, Apple on the weekly time frame. Apple is down into a little bit of weekly demand here. It's not the greatest weekly demand level, but we are coming in. We're still above the 13-week moving average, way above the 20 here. So Apple, ideally, I would love to see Apple down here at 96.43. That'd be amazing. 96.43, that'd be absolutely beautiful retracement. Coming right into the 20-week moving average right here, this would be the area. This would be the area to be a longer-term buyer. Phenomenal. So keep this one on the charts for sure, because if something happens here in the markets and we get that retracement, that'd be a great area to be a part of. Now here's your little demand level here on the daily. Right back in. This is proven demand right here because the sellers couldn't push back through. You can see the next day we gapped right into here, right to the the entry line right there. I get the 20 period moving average, 50 period moving average coming through here that we're just above. So up into the 20 and the 13 period moving average, retracement back down. We hit this demand level. If we could go lower, that'd be great tomorrow. That'd be great. So right down on 110 would be awesome. Stop loss goes below 107.79 right there. Target 1, 115.20, 120.06 for target 2, 130. And then let's see how high this baby can go. But coming in there. So this is Apple. Let's drop it down to 4 hours. Right? Entry on the 4-hour time frame would be breaking above 112. Let's see what the high of this candle is. High is 112.55, so 112.60 and above would be your entry here. So beautiful little bullish Harami formation coming off the demand level right there, breaking above the high of that little candle, bullish candle. 112.60 would be your entry point. Right, looking for 115.26. So if that was the case, if we get that strength coming to the markets, stop loss can go below the low here. Right, if you want greater protection to understand that the stock actually fully fails, you'd be going below 107.70 here for your stop loss. But you can bring your stop loss under the candle here, and based on strength movement to the upward direction here. So break this down a little further, looking at a 30-minute time frame. Not going to see much more here. It tells us basically the same thing. Get above the high here, and you're game on. Target 1, target 2, target 3. That's Apple. That's Apple. There we go. In a nutshell. Have a good one. I'll be back tomorrow. We're going to look at an update on these transactions, see how we did. We rocked it and crushed it last week. I expect to do the same this week. Have a great week, and I will talk to you soon.